Hey everyone, this is Swan with BlackBoxStocks. Hopefully you're doing well. Today's video, we're going to talk about one of the Greeks. Woo, how exciting, right? This one's called Gamma. And previous video, we did one about Delta, net options Delta. And because we have a study built in BlackBox that shows net options Delta. Well, we have one for Gamma as well. It's called Gamma Exposure. You can shorten that with the term GEX, G-E-X. And so what is GEX? What is Gamma? Well, first off, if I click on the study here and pull it up, you can see what happens is it automatically draws in some red lines. If I bring this down a little bit, you'll see up above there is some green lines as well. So we're going to talk about what these all mean and what they represent in just a second. But let's talk about what GEX is first. What is gamma exposure? Well, the predictive power of GEX is essentially driven by the necessity of market makers to re-hedge some activities. See, they need to limit their risk and they need to realize profit. That's what makes them an option or a market maker. So they must limit their exposure to delta. So what does that all mean? Layman's terms. Here's an example. Let's say a market maker sells a single put contract to an investor at a 20 delta. That market maker must then short sell approximately 20 shares of the underlying stock in order to temporarily neutralize their delta. So what happens is over time, as these levels start happening, as people start coming into the market and buying and selling different options, puts, calls, it requires the market makers then to start hedging accordingly to remain delta neutral. So delta neutral has a direct effect on gamma exposure. And what happens over time is then you can get these gamma squeezes because of that. And there's certain times of the day where we get some beautiful looks of what could be served as magnets for the day based off of these gamma levels because the underlying price has to react to the market makers making their moves to remain that delta neutral. So we can see that here in these charts. Okay, so let's pull up we're going to look at SPY first. And you can see on SPY, we're going to we'll load in gamma exposure here. And what it's going to do is it draws in these red lines. And if I minimize this, you'll see up above is green and down below is red. So what does that mean? Green is positive gamma. These are all positive numbers up here. Down below is red. These are all negative numbers. SPY was negative 1.9 million in the negative on these 450s. Look what happened right out of the market this morning. We continue to just stair step down and go down to hit that 450 mark on SPY. So when you're in negative gamma, what we tend to see is the shorting the rips and selling the dips, covering those dips. So they short the rip, it goes up, they short it, it takes a hard dip, they cover it, it goes back up, they short it, and that's what gives us that stair step on the down play. Now the opposite is also true. If we were up here in green or positive gamma, the opposite is what we would see. They would be buying the dip and then shorting the rip, or covering the rip, I should say. So they would buy the dip, sell, buy the dip, sell, buy the dip, sell, which gives you that stair step or that trending day up. So the way that we use gamma exposure is we look at this and say, okay, now what's cool about the black box gamma exposure is I think it might be one of the only ones out there that updates live as we go through this material throughout the day. All right. These numbers update constantly. You can see we were 1.9, now we're over 2 million in the negative on this 450. So they update live, real time as we go through this information, and it helps you see where is the largest gamma level for the day. When you see a gamma level that stands out that much for the day, guess what? That's where we're going to be heading most of the time. All the time? No. Most of the time, yes. If I look at the Qs, kind of the same thing. We have this huge gamma level at 375. If I bring this down, you can see it was by far the largest gamma level that we have for the day. If we look at Tesla, we didn't quite get to the largest gamma level because if I pull this down, you can see our largest gamma level today for Tesla was 250. We got within, I think, 40 cents of that. So it didn't quite prove true on Tesla today. But again, where did we head towards, right? We headed towards that largest gamma level for the day. If I look at the DIA, the Dow, we can pull this down. You can see where we were. We were right in between these negative ones this morning, and that's exactly where we stayed in between. Now, if you notice, this is an example where I said it doesn't always work. We have a positive gamma line way up here at 360. It is our largest gamma level for the day. We did not go up that way on the DIA today. IWM, let's pull up another one. You can see here our largest gamma level by far was these 195s. We came right down to it, and that's where we stayed. Throw it on your chart, see if you like it. I fell in love with it. It kind of helps me see what those support and resistance levels are. If you go back to the Qs, for example, you can see once we hit this level of the 375 mark, it was support, then we lost it. It became resistance right through here, and now we're still below it. So again, does it work 100% of the time? Absolutely not. Can it give you an edge? Can it give you a little additional help on support and resistance, or maybe where we're heading on trending days? Absolutely. Check it out. Gamma exposure, BlackBoxStocks, stay green.